It's February 12th, JLD here, and welcome to MSTR Today in the Treasury Titans. Nothing in this video is financial advice, but listen, Michael Saylor, he is just on his horse, riding through the range, looking calm, cool, and collective. Why? Because he knows what's coming. And if you have heard Fong Lee and Michael Saylor on national television recently, they've been doing a lot of bits and they've been talking a lot about what the future of digital credit is, because that's what their focus is. And that's what they believe most investors' focus should be. But unfortunately, many have yet to come to the realization of what's coming in the world of digital credits. But if you watch this video, which I'm about to play for you, Michael Saylor says, stretch your income to 11. And this is a pretty cool video. It was about maybe a week or two ago where Strategy put out a request for people to submit what they thought would be a good 15-second video or a 15-second explanation of stretch. This one's actually 33 seconds. But I guess Michael Saylor liked it because he played it, or he actually posted it on his X account yesterday. So let's listen up.
When your dividend is at zero, this is like a normal checking account. You can't hear anything. How about we turn it up to 3%? Well, this is like a money market. Pretty boring. At 10%, this is awesome. But then there is strategy. You see, the numbers go to 11. We can stretch all the way up to 11%.
Stretch your income to 11. We are in heaven at 11%.
When you
Okay, that's pretty awesome. Kudos to whoever created this. That should have been on a Super Bowl, but at the end of the day, let's just save your $10 million from the Super Bowl ad and buy more Bitcoin, and then just let this get out to the world the way that it should, which is just through obviousness. Grain of Salt says, by my calculations, MSTR would be at $6,800 at MNAV of 1.0 and $12,000. That's again $12,000 per share at a 1.75 MNAV, which is Strategy's guidance. You do need a Bitcoin CAGR of 25%, which is fair. Bitcoin per share (BPS) would 3x, which is also reasonable. So you look at these predictions. This is what Grain of Salt's been putting out and talking about. I'll let you pause if you want to kind of give them a little deeper glance, but this is through 2035 with the Bitcoin CAGR at 20%, and then he kind of goes through the other again 30% and so on and so forth, and he just kind of builds up on that. And then of course this is in a 10-year time frame. So a lot of interesting stuff, and we actually did have a comment from British Hodl, not Bit Hodl, British Hodl. MSTR will be $30,000 per share at today's dilution within 10 years, with Bitcoin at greater than $1 million per coin. Amazon is at roughly $52,000 per share. But don't let your long-term hodl get diluted by short-term opinions you read on X and watch on YouTube. And this is British Hodl commenting on Grain of Salt's calculations. So both very bullish, obviously, but with long horizons. These aren't short-term predictions. So Chris says the entire strategy thesis can now be distilled down into two variables. One, the success of Bitcoin. Yes. Two, the success of Stretch. Yes. Three, everything else is noise. That's actually just the last point. So one, the success of Bitcoin, obviously MSTR, Strategy needs Bitcoin to succeed. That is obvious. And if you don't believe in Bitcoin, then you should not be investing in Strategy. If you think Bitcoin is going down to 8,000 and staying there for 5 years, you should not invest in Strategy. So one, the success of Bitcoin, and then two, the success of Stretch. I think both are absolutely going to be wildly successful. That's my thesis. That's my belief. That's what I truly am, let's just say, believe. That's just what I believe. It truly is what I believe, which is why I'm investing with this thesis. I'm investing in Michael Saylor and Fong Lee. I'm investing in Strategy, and I love investing with that company, with that team, with those financial engineering gurus. Absolutely. Let's go ahead and talk about Strategy. Max, who says Stretch is $100 now. I've been telling you, digital credit outperforms conventional credit. Stretch outperforms traditional credit by the way Bitcoin outperforms conventional capital. There is no second best. Bitcoin doesn't care if you believe it yet. The market does now. And there's Michael Saylor. And it is true. The market believes in Stretch. It's in this horrible Bitcoin sentiment with the Bitcoin fear and greed index, or I should say the fear and greed index being at 9, which is extreme fear. It was recently at 5, which is obviously also extreme fear, yet Stretch is trading at 100 right now. I mean, wow. Just imagine what happens when the sentiment turns around. Ragnar says, Stretch closed at $100 and reached a high of $100.04 today. That volume was 92 million. It only stayed above $100 for the last hour of trading today. If it stays at par for the full trading day tomorrow, Strategy will purchase 500 plus Bitcoin tomorrow from the Stretch ATM. So let's keep an eye on that, and let's hope that is the case. Chris says, a reminder that during the first 4 months of 2025, between January and April, both the NASDAQ 100 and S&P 500 fell 20%, yet ended the year up 20 and up 16% respectively. This too shall pass. The best is yet to come. And these 4 words, by the way, very important, very powerful. I've always loved these 4 words. This too shall pass, because it's so true when the market stinks and price action sucks and Bitcoin sentiment is terrible and strategy sentiment is miserable. This too shall pass. But listen, and you're going to hear me say this in the future, when things are rip-roaring and euphoria is in the air and Stretch is going to $20,000 per share in everybody's minds, or Stretch, I should say, MSTR is going to $20,000 per share in everybody's mind tomorrow. This too shall pass. The euphoria shall pass. The hyper bullish sentiment shall pass, and the pendulum will swing back. It's not a matter of if, it's just when. And we need to enjoy the great times. We need to make it through the tough times, because if you believe in this thesis, this is trending up and to the right. The best is yet to come. We have Rajat who says, MSTR can buy Bitcoin during a downturn for the first time ever without selling shares of its stock. You don't understand how bullish this is for Bitcoin. And this is in reference to the Stretch. Now, Stretch is at 100, and whenever it's going to be over 100, Saylor is going to be ATMing his face off of Stretch and buying Bitcoin immediately in the 60s. In the 60,000s range. Right now, Bitcoin's about 68,000 per Bitcoin. I mean, glory days. Now I have a great 6-minute clip that you're not going to want to miss. It's actually Michael Saylor posted this right here, which is the story of the day is Stretch closes at 100, exactly how it was engineered to perform. And that was Strategy CEO Fong Li said that about Stretch. And Michael Saylor posted this. So I'm going to play this clip for you as soon as we get back from thanking our sponsors. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you and your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR.
Let's talk to arguably the pioneer in the space of so-called DATs. Fong Li, President and CEO of Strategy, joins us now. Fong, great to talk to you again and just set the scene here, because when it comes to the performance of DATs, it's obviously very closely tied to the performance of Bitcoin itself. So what possibly could be the catalyst to sort of reverse the performance that we're seeing in digital gold right now?
Thanks, Katie. Look, Bitcoin is digital capital. And as digital capital, it's a non-sovereign, decentralized store of value asset that's supply limited, and it's digitally engineered to do so. And it sees up and down volatility because of its digital characteristics. When Bitcoin goes up, you'll see DATs go up more. That's how Strategy is engineered to be amplified Bitcoin. And as Bitcoin goes through a bear market, Strategy goes down more. I think the interesting story is we've engineered something to protect investors who want access to digital capital without that volatility, and that's Stretch. And to me, the story of the day is Stretch closes at $100, exactly how it was engineered to perform.
And I want to talk a little bit about your financing, about your purchases, because when I take a look at your last 3 weekly purchases of Bitcoin, you've been consistent in the market, but you've sold about $370 million when it comes to common stock, only about $7 million when it comes to your perpetual preferred shares. So my understanding was that you were going to make the preferreds your primary funding source. So far, that hasn't been the case. And I wonder why and what that says about demand.
Well, we've seen, as an example, last year, Stretch and our perpetual prefers raised $7 billion. So that was 33% of the entire preferred market last year. We're educating customers on what a preferred can do. 11.25% returns, cash dividends, tax deferred, paid monthly, 5x over collateralized. There's no other asset class like that out there, but it does take some seasoning. It takes some marketing. This year, we've seen extremely high liquidity with our preferreds, about 150 times other preferreds. And as we go throughout the course of this year, we expect Stretch to be a big product for us. And yeah, you're right. We will start to transition from equity capital to preferred capital.
I need to ask you about whether Strategy would be selling Bitcoin. Both you and Michael Saylor have been talking a lot about this because this is clearly a question that is put to you quite often. Michael Saylor has been very clear saying that Bitcoin is not, the idea that Strategy is going to sell its holdings were unfounded. You have made the point that if Bitcoin trades down to $8,000 for 5 years straight, you might need to sell your Bitcoin. What are the conditions under which Strategy might need to sell Bitcoin beyond a certain price level?
Yeah, it's a topic that people like to ask the question because I think there's doomsdayers that would like to see Bitcoin fail. If Bitcoin was to go down 90% for 5 years sustainably, we would need to potentially sell our Bitcoin to satisfy some of our convertible debt. It's not going to go down 90% for 5 years. It's extremely unlikely. People don't ask folks, well, what happens if Apple stock goes down 90% for 5 years? What would happen? We have a scenario planning to do that, but it's just not going to happen.
I see. So you're kind of citing an unrealistic possibility here, or levels that you don't see it coming to. Strategy obviously invented the DAT business model, and other companies have taken their cues from you to buy Bitcoin and other cryptocurrencies. Do you think these DATs, these companies, should take their cue from you if you do decide to sell some Bitcoin?
No, I think every DAT is different. I think every company should think about what is your treasury strategy as it relates to Bitcoin. DATs decide that that's their primary treasury reserve strategy to hold Bitcoin. Others might decide to put a 5 or 10% allocation to Bitcoin. Others might decide that they want to have access to Stretch and get 11% returns. I think DATs should operate on their own and do things that are right for them. And if they decide it's the right thing to buy Bitcoin or sell Bitcoin and Bitcoin down market, they can. It's not something we plan on doing.
Well, let's talk a little bit about the business of your DAT, because the point has been made over and over again that the number of DATs in the market right now, you could probably see some consolidation there, and plenty of them are trading at a discount to their actual Bitcoin holdings, Fong. So I wonder, instead of buying Bitcoin, would you ever consider buying one of these DATs, trading at a discount, and basically cracking them open like a piggy bank to try and get some of their Bitcoin, probably at a discount to what you would get in the open market?
I think in any new market, whether it be electric cars or AI or SaaS software companies, you want to focus on your core product and grow your core product first. And our core product is digital capital, and on top of that, digital credit, which is Stretch. I think it would be a distraction to go buy at a discount to net asset value another digital asset treasury company, just like it might be a distraction for one AI company to buy another or a software company to buy another. And they tend to not focus on their product. Our product is Stretch, and that's what we're going to spend time growing and developing. And the issue of buying other debts isn't high on our list of things that we want to focus on strategically.
Operationally, what else were you focused on to make sure that Strategy is providing value added to its shareholders beyond the holdings of Bitcoin in your treasury?
Yeah, it's really an increase in Bitcoin per share. And I think that's something that folks may not understand as well. We're not just holding Bitcoin, we're incrementing Bitcoin per share to our shareholders. We said over the next 7 years, we could double Bitcoin per share. That allows the company then to be able to accrete Bitcoin faster than the underlying asset, which is what's unique about us and makes us an operating company.
All right, Fong, always great to get some time with you. Appreciate you stopping by.
What's the second best? There is no second best.